All right, welcome back to Nadlan Forum Podcast Daily. It's Ruby here, joined as always by Lior. Today we've actually got a bit of good news up top. Builder confidence in the housing market is finally on the rise again. Not a phrase we've used much this year, huh, Lior?
Yeah, it's true, Ruby. It feels like we've been in a holding pattern for ages. According to the latest NAHB and Wells Fargo report, builder sentiment actually jumped 5 points in October, up to 37 on the index. That's the best reading since April, though, it's still below the 50 mark, so not quite party time yet. But hey, after months of sort of treading water, it's a little spark.
Totally. And I was reading that expectations for future sales, like for the next 6 months, finally hit above 50 again. That's the first time since January, right? I was talking to this young builder last year in Melbourne, Australia. Bit of a tangent here, but he said the mood shift in the US feels just like what they saw when rates finally stopped going up back home. Suddenly, even though there were still heaps of challenges, everyone had this collective sigh and started planning for the future again. Just a little bit of hope goes a long way, doesn't it?
Absolutely. And optimism is contagious. Even if the market's still, not exactly easy, confidence tends to translate into more activity. NAHB's chief economist, what's his name, Dietz? He said this October jump could be the early sign that we're, finally turning a corner heading into 2026. If rates keep trending down and the Fed does their thing, we could actually see starts picking up next year.
Yeah, and as we talked about in that episode about record home profits, it's always a mixed bag. Confidence builds quickly, but so does nervousness. One shaky economic report and people panic again. At least now there's some room for builders to look ahead without feeling like they're rolling dice every month.
But let's not get ahead of ourselves. There's still plenty of headwinds, even though mortgage rates have dropped a tad, from above 6.5% to about 6.3%. The market's still, really strained. Affordability remains a massive issue, especially for anyone trying to buy their first home or families who've been stuck renting for ages.
Exactly. It's like every time rates ease a bit, people get hopeful. But the second they look at the price tags or the competition, they're right back to reality. And for builders, the obstacles aren't just about convincing buyers. The costs and labor shortages are still holding them back. Big time. Supply chain issues haven't magically disappeared.
Yeah, and I've seen this firsthand over the years in New York, especially with some of those Brooklyn projects. Even with demand picking up, the whole process could stall out because finding skilled trades or sourcing materials at a reasonable price, it's just brutal. You're relying on, luck half the time.
And did you see that stat? 65% of builders are using some kind of incentive now, and the average price reductions bumped up to 6%. Even with those discounts, for some buyers, it's still just out of reach. No matter how optimistic you are about the future, that's a tough sell for a lot of people trying to break in.
Exactly, Ruby. Builders are doing everything just to keep transactions moving. But you also can't just slash your prices forever. At some point, your margins disappear. I remember one project, this would have been around, 2021, where we thought a small rate drop would open the floodgates, but instead we ended up with half-done condos because the drywall never arrived. And suddenly the costs made the math look ridiculous.
That's it. It's such a tightrope. On the one hand, you want to respond to demand, but the moment labor or supply chain stuff goes sideways, you're back to square one. And we can't ignore that the government data delays aren't exactly helping clarity either. Even with some builder optimism showing up in the numbers now, it all feels pretty fragile. Let's talk about those incentives for a sec. This is really shaping how builders are selling right now. 38% of builders are still cutting their prices every month. That's a record, yeah?
Yeah, and it isn't just price cuts. We're seeing interest rate buy downs, free kitchen upgrades, closing cost help, all sorts of deals. Anything to convince buyers that now's the time. It's kind of funny. Like, back in the heyday, people fought over new houses. Now it's the builders hustling to win over the buyers instead. Cycles, right?
Absolutely. And those tactics really do move the needle for some folks. But then you look at the regional breakdown, confidence ticked up a bit pretty much everywhere. Northeast, South, West, even if the numbers aren't exactly blowing anyone away. The South and West, they're still the roughest markets for affordability though. The Midwest holding steady again.
I keep hearing that pent-up demand is just waiting, especially from younger buyers. If, big if, we keep seeing rates creep down and supply-side headaches shrink, NAHB's saying 2026 could shape up into a real turnaround year. But we're not there yet. And builders definitely are not acting like this is all solved. They know things could shift just as quickly in the other direction. Sorta like what we said last episode. Staying nimble is everything right now.
Yeah, it's all about cautious optimism for now. We'll keep bringing these updates as the market shifts. And hey, if you're looking for more on incentives or want to hear more horror stories from Lior about drywall, let us know. Thanks so much for tuning in, Lior. Always a pleasure chatting with you.
Same here, Ruby. And thanks everyone for listening. We'll be back soon with more news and maybe, just maybe, even better numbers to talk about. Catch you next time.